Imagine opening a retail store. Like, you finally unlock the front doors, right?
Right.
And customers are just immediately lining up around the block to buy your product. Revenue is starting to pour into the cash registers, and the bank phrase response is to just slash your business's overall appraisal value by 40%.
Yeah, that makes no sense.
Right. But that is exactly what Wall Street is doing right now to a company that just achieved one of the most, honestly, difficult engineering feats in human history, which is beaming broadband internet from space directly to the standard unmodified cell phone that's sitting in your pocket right now.
Yeah, we are looking at a classic, almost violent market disconnect here. I mean, as of late August 2026, the gap between this company's fundamental commercial momentum and its cratering stock price it's the defining puzzle for anyone who is tracking the industrialization of space right now.
Okay, let's unpack this. Our mission today is a comprehensive deep dive into AST Space Mobile. And we have a mountain of sources in front of us today, financial reports, analyst coverage, technical breakdowns of the direct-to-device satellite connectivity market.
That's a lot of paper.
It is a ton of paper, and we really need to untangle their transition from this pre-revenue, highly speculative research project into a functioning early commercialization space infrastructure platform. But most importantly, I think we need to figure out if the market is accurately pricing in some kind of catastrophic failure, or if investors are just entirely missing a massive operational turnaround here.
Well, to understand that tension, we have to kind of put their recent development milestones side by side with the market is interpretation. So on the development side, they're hitting their targets. I mean, they now have 13 commercial satellites actively orbiting the Earth.
Wow.
Yeah. And for context on their financial velocity, they had essentially zero revenue in 2023. Zero.
Oh, right. Literally nothing.
Exactly.
Yeah.
Fast forward to the second quarter of 2026. And they reported this major inflection point, bringing in $31.5 million. And management is standing firm on their full year 2026 guidance. They're projecting between $150 million to $200 million.
I mean, that is a staggering leap in an incredibly short time frame. And we should clarify, we aren't talking about traditional satellite internet where you need to, mount a bulky dish on your roof and align it perfectly with the sky.
No, not at all.
We are talking about the sci-fi reality of taking the phone you already own, just walking outside and getting a broadband signal beamed down from low Earth orbit.
Yeah, the technological leap is undeniable, which honestly is what makes the market interpretation so fascinating. Because over the trailing 13 weeks, the stock has plummeted 41.4%.
Which is brutal.
It is. We are looking at a share price hovering near $62. Down from a 52-week high of nearly $134. So Wall Street is looking at a company that is actively generating tens of millions of dollars with a genuinely revolutionary product, and they are just hitting the sell button.
Yeah, so if the roof isn't caving in on the technology side, it has to be leaking cash on the financial side. I want to pull up their trailing 12-month numbers because the sheer scale of the capital required to build a cell network in space is, frankly, difficult to comprehend.
Yeah, what's fascinating here is that the capital intensity is the anchor dragging down the valuation. When we look at their trailing 12-month net margin, it is sitting at a negative 573%.
Oh, man.
Yeah. In just the first half of 2026, their free cash flow was a negative $1 billion.
A billion with a B.
With a B. And over $850 million of that was pure capital expenditure, the hard costs of physically manufacturing, testing, and launching these massive pieces of orbital hardware.
And we should probably clarify why that hardware is so expensive, because people are used to traditional geostationary satellites, right?
Right, the ones sitting 22,000 miles out in space providing your satellite TV.
Exactly, and those just hover over one spot on the Earth. But to connect to a low-power smartphone antenna, AST Space Mobile has to use low Earth orbit, which is only a few hundred miles up.
Right. And the physics of low Earth orbit, it dictates the entire business model. Because at an altitude of 300 miles, a satellite can't just hover. It has to travel at roughly 17,000 miles per hour just to
keep from falling out of the sky.
Exactly. Just to keep from falling back into the atmosphere. So from the perspective of a user standing on the ground, that satellite is screaming across the sky and will literally disappear over the horizon in a matter of minutes.
Which means the company can't just launch one or two satellites and call it a day. They have to launch a massive, coordinated constellation. So as one satellite dips below the horizon, it has to seamlessly hand off your phone call or your data stream to the next satellite coming up behind it.
Yeah.
And it has to compensate for the Doppler effect and atmospheric interference the entire time, all without dropping the connection.
Yeah, building a network capable of that level of orbital choreography requires just a breathtaking amount of upfront capital. And that brings us to the balance sheet. Their total long-term debt sits at nearly $3 billion.
Wow. $3 billion.
Yeah, so when institutional investors look at $1 billion in negative free cash flow over 6 months, alongside $3 billion in debt, they immediately start pricing in the fear of dilution.
Because they assume the company will run out of money.
Right. The assumption is that the company will inevitably have to issue millions of new shares just to keep the lights on, which, wipes out the value for current shareholders.
I mean, I am looking at management's statements here, and they are pushing back hard on that dilution narrative. They reported a pro forma liquidity of $3.7 billion, and they are on the record stating this is plenty of runway for 2026.
Sure, management is confident, but the market is heavily discounting that confidence.
Yeah.
I mean, based on the inherent delays and cost overruns historically associated with the space sector, investors are skeptical.
Yeah, but I want to challenge this purely apocalyptic view of their financials for a second, though. Yes, the net margin is a bloodbath right now. But when I look at their trailing 12-month gross margin, it is over 44%.
That's a great point.
Right. For a company burning $1 billion every 6 months, a positive 44% gross margin is actually a massive signal.
It is. It reveals the underlying unit economics. Because gross margin strips away the debt servicing and the corporate overhead, right? It shows you the profitability of the core service itself.
Yeah, it looks exactly like the rollout of terrestrial fiber optic networks in the late 90s, or building undersea communication cables. Like, the fixed infrastructure costs are brutal upfront. You spend billions digging trenches or launching rockets. But once that infrastructure is in place, the cost to add the next 1,000 users or the next million users is almost zero.
Exactly. You achieve this massive operating leverage. The gross margin proves that once the network is built, it will be a cash-printing machine. The existential question, though, is whether they can finish building it before the debt crushes them. I mean, they are essentially racing the clock to generate the cash flow needed to service those loans.
And that tension brings us to how they actually plan to win that race. So let's dig into the operational roadmap here. Rather than just listing off their goals, let's look at the interconnected problems they have to solve to flip market expectations. And here's where it gets really interesting, because it all starts with the engineering bottleneck, which is capacity.
Right, so they currently have 13 satellites in orbit. Now, 13 gets you intermittent service. You can send a text, wait for a satellite to pass overhead, and the text goes through.
Which is cool,
But that isn't a commercially viable broadband product. To provide continuous, seamless, direct-to-device service at scale, they need to reach a critical mass of approximately 45 satellites.
And the timeline for that is incredibly tight. They need those 45 satellites active by early 2027.
Yeah, reaching that 45 satellite threshold is the prerequisite for everything else. It is literally the only way they can realistically hit their aggressive 2027 revenue target of approximately $1 billion. Without the capacity, they don't have a product to sell.
But capacity alone doesn't pay the bills, right? You can have 45 state-of-the-art satellites flying overhead, but if nobody is buying the service, you still default on your $3 billion in debt. They need ironclad demand to justify that massive capital expenditure.
And this is where the story shifts, because the demand side of the equation is arguably their strongest asset right now. I mean, they are sitting on a contracted backlog of $1.3 billion.
Which is huge. And a massive chunk of that backlog comes from sovereign satellite strategies, specifically over $100 million in new U.S. defense awards. I find this aspect endlessly fascinating because it completely shifts the narrative from a, consumer gadget play to a matter of national security.
Oh, totally. The Department of Defense is looking at this technology and realizing it solves one of their most persistent logistical nightmares. Because historically, secure military communications required deploying heavy, specialized equipment into hostile or remote environments.
Right, you see those guys carrying those giant backpacks with the massive antennas.
Exactly.
Yeah.
And if a unit's radio gear goes down or they can't get a line of sight, they're blind.
Yeah.
But if you can turn every single standard issue smartphone in a soldier's pocket into a satellite radio that works anywhere on Earth, you fundamentally change battlefield communications.
Yeah, it provides built-in redundancy without adding a single ounce to a soldier's pack. And from an investor's perspective, securing government contracts is kind of the holy grail. I mean, defense revenue is incredibly sticky. Governments rarely switch providers once a system is integrated into their operations.
Very true. And beyond the reliable cash flow, defense contracts act as the ultimate technological validation. I mean, if the Pentagon trusts this network for mission-critical sovereign communications, commercial telecom giants are going to feel significantly more confident migrating their own customer base onto the platform.
Okay, so we have the engineering path to 45 satellites, and we have the defense contracts proving the demand. But there is a third critical piece to this puzzle. You can have the best satellites and the best customers, but you still need a legal lane to transmit the data. We really need to talk about the Legato agreement and the fight over spectrum.
Yes. So, pending clearance from the Federal Communications Commission, AST Space Mobile could secure rights to as much as 45 megahertz of spectrum for over 80 years through their agreement with Legato.
And the word spectrum gets thrown around a lot in these financial reports, but we really need to emphasize why this specific block of 45 megahertz is such a big deal. I like to think of spectrum like exclusive zoning rights in Manhattan.
That's a great way to put it.
Right. If you own the rights to build on a specific city block, no competitor can come in and build a skyscraper on top of yours. Once the FCC grants you those specific radio frequencies, you legally own that airspace.
Yeah, that Manhattan zoning analogy perfectly captures the scarcity value here. In the world of cellular broadband, bandwidth is directly constrained by the amount of spectrum you control. So 45 megahertz of mid-band spectrum is a massive multi-lane highway for data. It dramatically increases network capacity, allowing for exponentially more simultaneous users and much, much faster download speeds.
I mean, I am looking at this Legato deal, and I am honestly a bit skeptical about how smoothly this will go, because having an 80-year monopoly on a prime cut of spectrum sounds amazing on a spreadsheet, but this is entirely pending FCC clearance, given how fiercely traditional terrestrial telecom companies protect their turf. Isn't there massive regulatory risk being glossed over here?
Oh, the regulatory risk is substantial. Spectrum allocation is essentially a zero-sum knife fight in Washington. Even though AST Space Mobile is partnering with various terrestrial carriers rather than competing with them directly, handing an 80-year competitive moat to any single entity triggers intense scrutiny. Rivals will lobby against it, and, well, the bureaucratic gears of the FCC turn incredibly slowly.
So it's essentially a binary event. If it gets blocked, their data capacity is severely bottlenecked. But if the ink dries and it gets approved, what does that actually do to the valuation?
An FCC approval would be a massive re-rating event. Securing that spectrum transforms the company from an infrastructure builder into a gatekeeper. It locks out potential low Earth orbit competitors who simply won't have the legal frequencies available to offer a competing service of the same quality.
Okay, so we've been looking at this very granularly, focusing on this one company's balance sheet and FCC filings. But they don't operate in a vacuum. The broader macroeconomic trends surrounding the commercial space industry have to be factoring into their margins somehow. I mean, Goldman Sachs is projecting a $1.8 trillion global space economy by 2035.
Yeah, and that macro environment is the hidden tailwind that makes this entire business model possible. I mean, think about it. 10 years ago, the cost of launching a kilogram of payload into space was so prohibitively expensive that a constellation of 45 massive broadband satellites would have bankrupted any company attempting it.
Right, but the industrialization of reusable rockets has fundamentally altered the math. We've gone from launch costs being tens of thousands of dollars per kilogram down to just a fraction of that.
Exactly. As launch costs collapse, the capital intensity per satellite drops alongside it. Every time a launch provider lowers their prices, AST Space Mobile's path to free cash flow break-even gets shorter. It actively reduces the amount of debt they need to take on to finish the constellation, which directly alleviates those dilution fears Wall Street is currently obsessing over.
Okay, we have all the pieces on the board now. The capital burn, the 45 satellite threshold, the defense contracts, the spectrum moat, and the falling launch costs. Let's synthesize this into the two diverging paths for investors. Walk me through the gravity of this situation first. If this thesis breaks down, how does it happen?
Well, the primary risk is simple. It's physics and fire. We're talking about strapping highly sensitive multi-million-dollar communication arrays to the top of massive rockets and blasting them through the atmosphere. The execution risk is ever present. A launch failure, a deployment malfunction in orbit, or even just chronic delays in manufacturing All of that pushes the entire revenue timeline backward.
And as we established, time is the one luxury they do not have. That negative $1 billion in free cash flow is a very loud ticking clock.
It really is. If a launch anomaly pushes their goal of 45 satellites late into 2027 or 2028, well, their $3.7 billion liquidity buffer suddenly looks inadequate. If they miss their revenue targets because the network isn't fully operational, they will be forced back to the capital markets. Which means issuing heavily dilutive equity at depressed share prices or taking on even more toxic high-interest debt. It becomes a death spiral.
Yikes. Okay, let's pivot to the upside before we depress everyone. Assuming they can manage the physics and the rockets do what they're supposed to do, paint the picture for the next 2 to 5 years. What does the blue sky scenario look like?
Well, first, we have to explicitly state that this is an optimistic framework based on their projections, not a guaranteed prediction. But if we connect this to the bigger picture, if the catalysts align, the sequence is incredibly powerful. First, they successfully deploy the 45 satellites by early 2027 without any anomalies. Second, the FCC clears the legato spectrum, locking in their 80-year moat. Third, their telecom partners officially switch on the commercial service, and everyday consumers realize they never have to drop a call again.
And what happens to the balance sheet in that reality?
The cash burn peaks right now, in the second half of 2026. As the network comes online, revenue scales violently, hitting that $1 billion target in 2027. Once the infrastructure is paid for, that 44% gross margin takes over, generating massive free cash flow. And the U.S. defense contracts provide this permanent, non-cyclical revenue floor that basically guarantees their debt servicing.
How does the market digest that transformation? Because currently, AST Space Mobile is trading at a price-to-sales multiple of 328. The market is trading at like a highly speculative venture capital bet.
Yeah, but in the blue sky scenario, the narrative shifts completely. It stops being valued as a high-burn space startup and transitions into being valued as a scaled, cash-printing telecom utility. And when a company achieves monopolistic characteristics in telecom, the market aggressively re-rates its value. Analyst price targets, like the $90 projected by Cantor or the $78 from UBS, would likely be revised upward as the execution risk evaporates.
Right. It transitions from a story about surviving debt to a story about monopolizing a new industry. So what does this all mean? For our listener who is tracking this transition in real time, how do we filter out the daily noise of the stock market? Give us the 3 vital signals to watch over the next few quarters.
Okay, the checklist is straightforward. First, watch the upcoming Q3 2026 earnings report this November. The absolute key metric is top-line revenue. Are they steadily tracking toward that $150 to $200 million guidance? Any miss there will immediately spike dilution fears.
Revenue tracking is step 1. Got it. What is the second signal?
Confirmation of commercial launch. Technical testing is great for press releases, but we need to see terrestrial telecom partners officially offering direct-to-device service to paying retail customers. That proves the unit economics work in the real world and confirms the recurring revenue stream.
And the third signal?
The risk indicator. You must monitor for any announcements regarding satellite anomalies, manufacturing bottlenecks, or launchpad delays. The safety of their cash runway depends entirely on getting to 45 satellites on schedule. Any delay is a bright red flashing light.
Yeah, that gives us a very clear map. Track the revenue guidance, watch for the commercial launch, and monitor the launch pad schedules like a hawk. We've spent a lot of time today untangling the financial mechanics, the debt loads, the gross margins, the regulatory knife fights. But I want to leave you with a thought that steps outside the balance sheet and looks at what this actually means for the world if they pull it off. We discussed how the U.S. military is eager to use this to ensure their communications never go down. But think about the civilian implications in tightly controlled authoritarian countries. If everyday citizens can suddenly connect their standard unmodified cell phones to a U.S.-backed satellite internet connection, a connection that physically bypasses their local cell towers and state-run firewalls, how does that alter the global balance of power?
It's huge.
Right. If a government can no longer shut down the internet to silence its people during a protest because the internet is just, raining down from low Earth orbit directly into their pockets, we are looking at a paradigm shift that goes far beyond a stock price. It fundamentally rewrites the rules of global censorship and national sovereignty over the next decade. Definitely something to ponder as we watch those next rockets roll out to the launch pad.